Right, so just going to talk some stocks, some watches, and a broader read that we will kind of envision going forward. So we obviously have, in terms of SPY, SPX, a little bit of a gross weekly candle here. Overall gross weekly sequence like I've kind of been discussing lately. Um, However, it's not solidified yet, if I can kind of say that with confidence, right? We have the kind of rally the end of last week. We have the notable kind of distributive stall, the big gap up and failure, taking out the previous weekly highs on Wednesday and the subsequent lower high into a Thursday, I think data-driven sell, if I'm not mistaken. That gives you a nice little 1.5% red day. We see the decline, the sweep of this bull gap, and a little bit of a cleaner daily close than you would like if you're a short-sided focused position here, and kind of like a nice wick and hourly higher low that we find in the end of Friday's session. So I do think that this is still topping out. I do think that there's a short that's in play here. I do think that we see a UTAD a little bit more confidently soon, if I'm being completely honest. It's a little speculative, but I wouldn't position myself aggressively quite short side yet, right? Now, one thing that I do want to point out, right? We have OPEX next week on the 20th. We have expiration on the 18th. And we have the Supreme Court decision for the tariffs on the 20th, right? Now, we know that, this positioning has already been built out. Nothing new that's going to come out hasn't been prepared for already, and I do think that this is potentially what's going to kind of start bringing the market down, is that tariff Supreme Court decision. I think that it's, what initially set the sell-off earlier, not earlier, in Q2 of 2025, right, when we had that tariff news. It happened to occur within a distribution that was already kind of in its final stages and beginning to show signs of an accumulation. We had already cut off 12% of the we had already declined 12%, and we declined another subsequent 9% following that, right? And then we get the peak fear and kind of capitulation and hand change, right? And peak fear and everything, whatever you want to say, that someone stepped in to save the market, right? We had a lot of people selling that were a little late to the party, and the informed party was bidding that, selling the entire time, waiting for this reversion, right? Now, I think that two things could potentially happen here, right? I think we could get maybe like a good decision, right? Not a good decision, but a decision that everybody kind of reacts positively to, begins to buy equities, and that can kind of spark a UTAD reaction. But we can also get a decision that's going to kind of be negatively impactful to the market, and kind of spark a lot of selling, right? So it's kind of going to be a sell the news scenario potentially, or buy the news that gets sold. I don't really want to speculate. I think that the positioning has already been built out and the campaign is already kind of established. However, a nice little spike off of some kind of catalyst and some kind of event that generates a lot of counterparty liquidity and fills for those sellers to offload their inventory would be ideal. And that lines up perfectly with the expiration on the 18th and the expiration for the options on the 20th, which, as you know, that can unpin the market. The market kind of is free to move once those hedges expire, and that Vantage harm doesn't necessarily affect this market or affect the underlying movement, right? The options market, especially in today's day and age, has a large impact on when and why and how, the equities move. And this is no different than last year when we saw the February expiration on the 19th be our top, inevitably, or until we took that out in the summer of 2025, right? So the timing is not a coincidence. Whatever happens is not going to be a coincidence. Obviously, the market behavior on Tuesday, Wednesday, Thursday is going to be important. None of this is a coincidence that we're going to see this big, important decision occur when the markets are now free to move. And we're more than likely going to see a reaction one way or another. I would not mind, like, Supreme Court decides that they're legal, we get a big spike to 700, and then we kind of get that change of hands and that broader equity market to be topped out. I don't know if the market will top on a Friday, right? That's something that kind of have to understand. A lot of people won't, like a lot of institutions won't position themselves over the weekend, and it's not going to necessarily bottom or top on a Friday, just like we didn't bottom on April 4th. We bottomed on April 7th. because we had that kind of selling over the weekend, and then that big party stepped in, and topping it on a Friday kind of leaves liquidity, right? A weekly high. It kind of leaves a lot of liquidity and supply in that range that wouldn't have been swept and could potentially be a target later on. So options move the market. The underlying movement is because of options, and when that occurs is because of the options market, and especially in today's day and age, the hedges, the positioning, it all, I'm not necessarily a savant when it comes to these things, but I understand the broader or the broad context of why they're important and why the timing matters here, right? We have QQQ as well, filling the February 6th gap. I don't know. I wouldn't mind a true UTAB, but this is a very gross looking weekly perspective, like weekly look here, right? So that's something that you kind of have to take into consideration. SMH, I do think that NVIDIA's earnings report is going to catalyze a broader movement to the downside. We kind of see this distribution building out. I've said before I wouldn't mind a true UTAD above the October highs, but I also think that we can get maybe a little higher low within this kind of spike off of 170, this kind of floor. That's kind of potentially inevitably going to be our path of least resistance to decline to 150. If we can find a higher low here, get a run up into the report, maybe like a gap up, we see the options get crushed off 199, and then we see a footprint to play it off of down to 170, and then a following path of least resistance, right, where we had this weekly floor that's been swept and hasn't really gotten us anywhere. That's going to be what I'm looking out for. Very similar to the report in February of last year. This kind of fake out candle, see an 11% intraday decline that I caught the entire move on weekly and like 5 or 6 week out contracts for a couple 100%, I think it was. XLF is very interesting, right? This is a very telling chart. I think this is a distribution that has been going on for a while now. This was potentially our preliminary supply, our climax, our sign of weakness, our UT, our automatic reaction, our sign of weakness floor being within this gap from June, and then our UTAD being put in December, right? We had this very aggressive fake out candle on the 5th that we failed and subsequently declined like 10%, 9%. And we see this big kind of failed accumulation within here that resulted in a lower high and a breakdown for a 5% session or 5% weekly decline. It's nothing that I'm super confident in quite yet. I wouldn't position myself aggressively. Schwab gave us a 10% decline on the weekly look with a very ugly candle at new highs. More or less just something that I'm taking note of in consideration in terms of this distribution that is developing, as well as just the notable, like the financial sector being a very big red flag when it's declining and looking like this, as it's the second largest holding in the S&P 500. So that's a big focus of mine going forward. Like I said, because of a path of least resistance through this gap to decline to 50.82. Nothing I'm super focused on quite now. Energy is rallying aggressively. It's very similar to the Q2 2024 rally that we saw. Just a campaign that was established, matured, and a big event that kind of sparked a big rally, and it was just like effortless movement through that, where there was no real opportunity to kind of build out a position within here. I still do like Oxy Commons, but I still wouldn't mind a decline to 34 for lows taken out. Nothing really can do until then. XLV and healthcare is a really big focus of mine, right? We actually now have 5 inside weeks inside of the January 5th candle, and just a large amount of consolidation in here. And a couple of names that I really do like going forward that I'll discuss in a second. I think Microsoft rallies back up to 440 and then potentially up to this gap fill. We see the decline off the January report, the subsequent kind of continuation into the full May 1st gap fill, with a really one-sided kind of capitulatory look where all that selling is being bid into a buyer layering this bull gap. And then a nice spike and a potential higher low within the INWOG that we have defended here on multiple daily wicks. I think this is a pretty good look that you can definitely long back up to 440, maybe 480 on some commons. It's a little speculative with how the broader market's kind of developing, but I don't mind how this looks right now. Meta, we never really got the 695 retest, and we saw the decline into this gap. This was a beautiful long into a beautiful short. phenomenal read. The rest of these names don't look the best. Apple, like I said, we're looking at a potential LPSY here within this range that we had previously saw a seller showing his hands and a weekly buyer fail to pin it above that 277 spot. And then we see just like a lower high and a weak daily close on Wednesday and a big time 5% decline and a subsequent 2.27% decline on Friday. If there's another opportunity to enter this on like a lower high and a progression gap reclaim, there's a spot to trade this down to 250. Otherwise, I think maybe can take a second and wait for an opportunity to trade this down to like 240. Yeah, as far as that, right, I have a couple watches, like I said, with healthcare. I really do like this Moderna chart, right? We have the floor being established. We have the climaxes. We have the reaction. We have the spring, the test, the spring, the last point of support. And then we have this really, really big rally with what kind of initially looks like not the most appealing sequence. And then we see, a really nice, like we defend this weekly candle, the low of this weekly candle for 4 weeks. We see the harmonic volume patterns, and we see a really nice weekly wick. I have a commons position at a 42.60 average. And what happens here, right, is we get this big news event prior to the report on Wednesday that a lot of selling occurred on, and then a subsequent bidder stepped in aggressively, followed through on the daily closure, and then we get the spike on the report. Now, the reason this really interests me is because we have this kind of shakeout prior to an earnings report where we don't have the greatest daily candle. I would have really appreciated a cleaner daily candle closure. But when we have this shakeout, right, it offers a big change of hands, a lot of selling that's bid by a notable informed party prior to the report. And we get, up to the high of day on Friday, a 22% reversal, right? And so this reminds me a lot of Lyft back in 2024, right, where we had this big time, obviously this accumulative look beforehand, and then like a higher low, a big rally. We have this, how long are we in this range for? We have this 45-day 10% range that we're trading in, and then we have this fake out, like a gap down, probably on some news that's bid on substantial volume prior to the report. I don't know why it doesn't say earnings report. That rallied, it ended up taking us 50% actually after hours because of a calculation error or whatever, and we get another 35 and then another 16%. So this kind of solidified the campaign, and a lot of hands were changed, and it's very similar to how this Moderna chart looks. So I'm really, really big on how this is positioned, or how I'm positioning this right now. 42.60 average. I'm really risking this earnings gap, targeting these highs being taken out. I wouldn't mind watching this like break down to $40, kind of being my risk. So about a 4 R to R. And like I said, a massive campaign, and we're now seeing like a sign of strength and a last point of support right around this previous floor of accumulation that was developed at $36, $37. Could even take this to 62, honestly. And like I said with XLV, I really like how that looks. MSTR is something that I'm paying attention to as well. You could position in this potential spring, right, of this accumulation. I've been talking about this massive decline. And we see a lot of fear here, where a lot of selling is now being subsequently bid on climaxes, attempts to rally this stalled, but the supply in this range being wiped. And we see a big breakdown before the report, and then a rally, and then a rally off of the report, 26% session, the consolidation developing. I would wait for like a break and a higher low off of 155, and I think you can take this to 200 to 232, which is the lows that we put in April. It's just a very notable climax, and a lot of peak fear going on within the Bitcoin environment. And oh my God, and I do think that a reversion is going to happen to the mean. It always does, right? NVO is another healthcare name that I really like. Massive decline from the 2024 highs. We see kind of the preliminary signs of accumulation showing their hand in April. The rally not really met with significant structure. A big sell-off on the July report, right? That is bid. This is all happening at 2022 lows and levels. A big sell-off off the July report that's bid. A subsequent 40% reversal. Take those lows out on. We actually had this happen before the report, and then the report happened, give us a nice 7% candle. We take those lows out, we rally further into the gap, we see a sell-off that doesn't take out the low, but gives you a very aggressive like fake out, and then like an internal structure here, right? And I'm watching this for a little bit more of a solidified daily kind of sequence to long this to the $69 spot, kind of where this sequence began to develop as far as an accumulation goes. I'm really waiting for a little bit of a more significant signal, right? I wouldn't mind having like a $55 average instead of a 50. But I'm looking for this to trade to $69. Big sell-off, big climax, big kind of spring here, whatever you want to call it, like a fake out, where we have a lot of selling, and that selling is subsequently bid into kind of like some reactions that happen off the news. Really do like how that looks, right? And I do like BABA as well. Not my favorite look before the report. We have lost the progression gap. I didn't bid any comments here, but I am kind of still focused on this as far as a trade to 192, right? Oxy looks good. Disney, we took out these lows from November. The report sparked a nice rally, failed within the gap, and had a big kind of climax or like sell off on the Thursday candle. That was subsequently reversed. But if you break this down, we have some intraday cumulative sequences develop on an intraday perspective. I like this chart for commons. Forward, flat open, subsequent from low to high on the earnings candle. Thursday, 6% rally, great flush opportunity on the report on Wednesday, and 5 inside bars with finally kind of breaking out of this range, and I think should push 15. UNH is another healthcare name that I really like. However, I couldn't, I can see an opportunity to long this here. I can see a long-term comments opportunity here. I can see multiple opportunities in July into October. Yeah, October, September, October. I could see a trade here. I could also see some patience being practiced. We take out these lows is one thing that I could develop, right? Because we fill this gap from Buffett News on the 15th. All off the report, we see the exhaustion and the wickage and a nice look this week as far as a weekly candle goes. But I think buying it here is a little bit premature because, like I said, we could slip into the 229 spot, take out this low, and it's a more solidified campaign to 438 to 481, or a third lower accumulation. We could also push into this gap, fill it, find a higher low, and then rally if this is kind of our kind of test. So I want to be a little bit patient on this name. I think that this is a great look to 480, maybe even 500. But I wouldn't position myself in it quite yet unless I have a long-term focus with room to add under 230. I like Nike Common still, decent little weekly perspective, but nothing more, nothing less on there, right? And that's pretty much it, right? These are my main focuses. I do like UNH. I'd be a little bit more patient. I am still looking at like a CRM Adobe position. These are massive sell-offs that could potentially finalize. I don't want to say finalize, but could potentially play a role in the previous accumulations that we've seen develop on these names. You look at Adobe, COVID lows, big volume, anomaly, wickage, right? A lot of this selling is being bid. We have a lot of volume on this weekly candle for a 1.64% decline, 42 million volume. The week before, we had an 8.5% decline, 33 million volume. I really like how these look. I really think that they can make a move. I wouldn't position myself in there quite yet, right? But look at the volume on IGV. I'm not saying these push to new highs. I'm saying that these are very notable accumulations and in pivotal spots with behavior that's reminiscent of a buyer taking advantage of all the selling that's happening. Snap taking out the all-time lows. I still think this pushes a nice move. I don't see any positioning in here quite yet. This is a very one-sided sell-off in the report. I wouldn't touch that. So that's my main look. I have some Moderna commons, like I said. I'm looking to take this for like a couple of weeks. $42.60 average, about a $40 risk, looking for about 55. I would watch an MSTR position for a push to 232. I would watch an NVO position for a push to 69. However, what I would love to happen here. This didn't even take out the low of this November 28th fourth print. So what I would love to happen here is we push to 56. We fail here and we find a higher low, and then you can long this to 64 to 69, right? Where this accumulation kind of started to develop. Let's just take, like $50, right? So you could get a $50 average still. But where this accumulation kind of began to develop, right? Which was after this big time news gap down, right? Although we do have the preliminary signs developing beforehand, this is when it, sparked a really good reaction and started to develop a range that's very reminiscent of an accumulation. And short side, like I said, Meta should decline, could potentially trade a lower high if it puts in down to 570 to 550. Apple's a focus of mine down to 250. XLF is a focus of mine potentially going forward. However, I just want to see how the broader equity market moves, especially with a tariff ruling on Friday and us going into a window of weakness, right? Now, if tech sells, that doesn't mean that healthcare will sell. That doesn't mean that energy will sell. That doesn't mean that consumer staples will sell, right? Right now, I think we have a lot of dispersion going on. We have a lot of names pulling away from each other, a lot of things that are not necessarily correlating. Are a lot of things that are really pinned as well, right? Like, I think some of these things are going to spark a lot of liquidity, and we're going to potentially see like a healthcare rally and a tech sell-off, right? Like an NVIDIA rally and a tech sell-off, maybe even a semiconductor sell-off and a software rally, right? Right now, things are a little pinned. We have this dispersion. We have individual constituents moving away from each other. We're going to see indexes pinned, right? Because if things are moving away from each other, then indexes are going to stay pinned, right? If everything's rallying, indexes are going to rally and vice versa if everything's selling. Once these flows and hedges come off the table, very similar to last year, and these events spark a lot of liquidity, things could very well move one way or another very quick, and you're going to want to have an opportunity long and short. Although I do think that the broader market sells off, the positioning and size of tech and finance names are larger in the S&P 500, and obviously the Nasdaq is all tech names. So those are going to have more impact if they sell and whatnot. So yeah, that's my look going forward. It's my small watch list.